committee, we'll go ahead and call the meeting to order. First item on the agenda is a hearing on HB 2680. We'll go ahead and open the hearing on HB 2680, and we'll get a description of the bill from Charles Reimer, reviser.
Thank you, Chairman, members of the committee. The primary goal of HB 2680 is to incentivize the creation of savings accounts that belong to employees of eligible employers. And the bill establishes the Kansas Employee Emergency Savings Account Program. It's administered by the Secretary of Commerce, provides a tax credit for participating employers who contribute to employee savings accounts, also provides a subtraction modification for employees in the amount of the deposits that they make through a payroll withdrawal or payroll deposit. One important item on this bill is that it doesn't start until tax year 2023. Any employer that employs no more than 250 employees, so there is that limitation, and is subject to the Kansas income tax or the privilege tax on financial institutions may participate in this program. The employer submits an application to the Secretary of Commerce. Secretary reviews the application, provides a certification of participation to an eligible employer. The employer then assists with the establishment of the employee savings accounts and provides automatic deposits to the accounts by means of payroll deductions from employees' paychecks as authorized by the employee in writing. The accounts must be federally insured savings accounts. They must offer online and mobile banking access. The account belongs to the employee. Employers may not restrict use of the money in the account. The employee may withdraw or modify authorization for the payroll deductions upon written notice to the employer. There are some requirements for participating employers. They must make an initial deposit to the employee's account of at least $50. They can make additional contributions based on a matching funds program or some other program as determined by the employer if they wish. They must offer a mobile application to participating employees that provides notification of payroll deposits, financial literacy tools, and educational materials. They must withhold or deduct a portion of the employee's wages and deposit that amount to the employee savings account as directed and authorized in writing by the employee. They may not charge any administrative fee or other charges for their costs, the employer's costs of making the deductions. On or before January 31 of each year, employers must provide each participating employee notice of the employee's total payroll deduction deposits to the account during the prior taxable year. Finally, they must submit an annual report to the Secretary of Commerce that provides, with respect to the preceding year, the number of accounts that were newly established, the amounts of initial deposits to those accounts made by the employer, the number of participating employees, the amounts of payroll deduction deposits, the amounts of additional deposits made by the employer, and any additional information requested by the Secretary. The benefit for employers is that they receive a tax credit. Again, for tax years 2023 through 2025, they will receive a credit against their tax liability under the Kansas Income Tax Act or the privilege tax imposed on national banking associations, state banks, trust companies, or savings and loan associations. And the amount of the credit is 50% of the initial deposit made during the taxable year to employee savings accounts. That's limited to $50 per employee savings account established during the taxable year. So that credit is up to 50% of the initial deposits made by the employer, limited to $50 per employee savings account established. In addition, they can receive 25% of additional deposits that they make to the accounts during the taxable year, and that credit is limited to $325 per participating employee. The tax credit amount that exceeds the taxpayer's tax liability for the year the credit is allowed may be carried forward for 2 additional years immediately following the taxable year for which the credits were allowed. These credits are not refundable, and they may not be transferred. Employees also receive a tax benefit. The bill amends 7932-117 to provide employees a subtraction modification from federal adjusted gross income for the purposes of determining Kansas adjusted gross income in the amount that is deposited in their savings account through payroll deductions. And that subtraction modification is limited to $1,500 or $3,000 for married couples filing a joint return. And again, that's only available for tax years 2023 through 2025. If passed, this bill would become effective July 1st, 2022.
A lot to unpack here, I think. Did you say they get 100%, the employee gets 100% tax credit? Or what's the employee's
Chairman,
tax?
with respect to employee payroll deductions, there is 100% up to the limit, which is $1,500 or $3,000 for married filing joint.
Representative Johnson.
Thank you, Mr. Chair, and thanks. Just following up, if I read through on the employee, it's a subtraction to adjusted gross income, which would essentially be deducting that amount as opposed to a credit, but I'd get a full deduction from my income of that amount, and then the credit applies to the employer portion of anything at 50 or 25%.
Yes, as limited.
Do we have any other models of these that might be similar in how we've done that, where there's that again, it's not overlapping, but a matching credit deduction on each side of the transaction, or other accounts that might be done similarly on an incentive?
Well, there are the individual development accounts. That's a little bit different. I mean, it is, I guess, vaguely similar. I mean, in the sense that there's a credit for contributions that end up in a public citizen's account. That's through community service organizations, but that is the only program that comes to mind.
So thank you. And then the deductibility would be similar to retirement accounts to that limit, just by being deductible, but again, only on our Kansas income, not federal. So thank you. Thank you, Mr. Chair.
Yeah, thanks for clearing that up, Representative. Any other questions for the reviser? Seeing none. Charles, I did have one more question on the, any limits on how they, or when they can take out the funds? Like if a business decided to put in, the $50 initial payment, and then over a year, the married couple puts in $3,000. Can they just take that out as it goes in, or does it have to be in for a certain period of time before they can remove the funds?
There are no limitations on the employee's use of the funds. And the bill specifically provides that it is the employee's account, and the employer may not restrict use of the funds.
Okay. Seeing no further questions. We'll open the proponent section of the bill hearing, and first up is Representative Mary Lynn Poskin. Welcome to Commerce Committee again.
Thank you. I love subbing here. Thank you, Mr. Chairman and Committee. Mary Lynn Poskin, House District 20, and I'll be delivering proponent testimony for HB 2680. But first, I'd really like to give you my sincere gratitude and thanks for the outstanding work and heavy lift that this committee has done on the House substitute for Senate Bill 347. I mean, have you even recovered from that yet? In acknowledgement of that strain, I will be as brief and concise as possible for a Poskin, and you are getting 2 Poskins today, so my apologies in advance. I hope this bill inspires you and energizes you, as it has many folks across the aisle and across committees, to do what we all came here to do: good things for good Kansans. House Bill 2680, a bipartisan-sponsored bill, is a bold and innovative response to Kansas small businesses' pleas for help in recruiting and retaining employees in this particularly challenging labor market, providing tax credits for offering a new employee benefit, the Kansas Employee Emergency Savings Account, heretofore known as KISA. And yes, I did Google that acronym multiple times to make sure it doesn't stand for anything weird, and we're good there. So Kansas would be the first state in the nation to do this. In addition to creating a competitive recruiting edge for Kansas, House Bill 2680 seeks to reduce employee absenteeism due to financial emergencies while increasing productivity and financial literacy. Research shows, and you have this either at your desk or in your information, research shows that emergency savings of even $100 to $250 are correlated with increased housing security, keeping the lights on, and increased financial satisfaction in life. In addition to the tax credit for employers, employees receive a subtraction modification for their own contributions to their KISA. So how did this come about? I don't know if any of you are familiar with Clifton's strengths. There's 34 strengths, and people have top 5. And one of my top 5 is strategic. And that means that I have information come into my brain and percolate, and then I draw connections between things that not everybody does. And so the idea for KISA was born of committee work we did last year in financial institutions and rural development, and in education committee, where we looked at financial literacy concerns. Then we saw the pandemic spike unemployment rates and strain family budgets, who often had little in emergency savings to fall back on. And now, as our economy rebounds, we're seeing that Kansas businesses are struggling to fill positions. I knew last year when we were working on stuff in financial institutions that Prior Products, a Kansas LLC, was really onto something with its powerful emergency savings program that addressed and touched all of these issues. We were inspired by its results, but couldn't see exactly how it fit into any current legislation, and concluded that it merited its own incentive bill, what is now HB 2680. As written, if an employee puts away $28.85 per week and their employer contributes the minimum to maximize the tax credit, they will have $2,900 in savings in 1 year. That would be $5,800 for a married couple. The first rough fiscal estimates on the bill assume that every single employer and every single employee will participate, and that it came in higher than what the sponsors wanted to see. But there are several suggestions and options for the committee to right-size this bill, and I defer to your expertise on that. The bill provisions are based on evidence-based best practices for incentivizing emergency savings, such as seeding, and that's where the initial deposit comes in, matching or reward contributions when an employee has put in, say, 4 weeks straight and not taken out, and that's all up to the employer. This app that provides feedback and financial literacy and goal-setting information, it can be homegrown or off the shelf. The bill also allows for businesses to customize their KISA for their own unique needs, their employees' needs, and their capacities. I'm going to ask Mr. Mason to roll the video that kind of explains a little more about KISAs.
What the 401k is for retirement savings, Onward is for emergency savings. We developed a employer benefit that helps low to moderate income workers build a financial cushion for themselves. We sell our program to companies that have a large number of workers that earn less than $20 per hour. We have a mobile app It helps people save directly from their paycheck. We send them financial tips, tools, and other resources directly to their phone, and also provide them with access to an emergency loan if an emergency were to come up. Access to credit is still a challenge for many low to moderate income people. When they have an emergency, they can't go to a bank to get a loan. Instead, they are left with payday lending shops, car title lenders, and other predatory sources to get access to quick cash.
We had people come to us in the past and they would want to borrow money or whatever because they got a car problem or a hospital bill to pay or whatnot. How do you support these people with a real live solution? Well, Onward was perfect because now they can participate and they can control their own financial lives as they start to contribute to their funds as their savings build up. So from a strictly business standpoint, it's improved morale, lowered turnover rates, and quite frankly, it's increased productivity.
The situation before I started using the Onward plan, it was dire due to the fact that I had no savings. So it was more of a paycheck to paycheck, you know, I had what I had and that was it. With the Onward plan, I have about $3,000 saved up. So it's also helped me set a goal for my financial future and be more confident in it.
I fundamentally believe that a $400 expense shouldn't destabilize a family. And with Onward, having access to an emergency fund, knowledge of your financial options, and access to a responsible and affordable loan can help someone move past a place of financial stress to financial security. And that can be life-changing.
So committee, I urge your bipartisan support of HB 2680, and I'm excited for Kansas to be the first state in the nation to make this tool more accessible for businesses. I can stand for questions now or when appropriate.
Let's get her now. Representative Johnson.
Thank you, Mr. Chair, and thanks for the idea. I like the idea of figuring out how we can help folks with emergency funds and save for it, but you'd said this would be the first one that is done?
Indeed, in the country.
And how does that relate to what the video was talking to us about?
Thank you. That might be a connection. So Prior Products is a company that uses a mobile app for Kansas, or for an emergency savings account program, and is one of the conferees today, and we'll explain that. And it was just to give you a little bit of an idea, since we weren't able to get an employee here today, how it works, how the mobile app can tie in and so forth. So that would be one of the apps that would be available off the shelf.
Representative, I think we would be the first state that would tie a tax credit to this benefit. Okay. It is out there and it is being used. This would just kind of entice companies to start it, and it's limited to 2 years so that once it's started, it'll just keep going on its own without a tax credit.
Thank you, Mr. Chair. And if I may continue on that topic, as we look to that, and certainly understanding the value of being able to take a deduction, as I might on various accounts, the ability to take it out immediately after getting a tax credit or a tax deduction is somewhat concerning. Can you help walk me through why that is the right one and the level of complication with that as it relates to the ideally simplistic account that I'd have for emergencies?
Sure. The idea is to let people be in charge of their own money, and that the whole premise is that it's to instill discipline and learning. And some of these apps, when somebody wants to take money out, might say, are you sure? You know, what is this for? But if somebody does get a nail in the tire of their vehicle, and that's going to keep them from returning to work for, 3 to 4 days, we would want them to have access for emergencies. And we don't know when that's going to come up, and an administrative process to take money out for an emergency would be difficult. So it is learning for the employee.
So thank you. I will still have the question of why the credit and the deduction is, but it may be better for others of the proponents to address that in more detail as well. Thank you. Thank you, Mr. Chair.
Any further questions? Representative Dodson.
Yes, thanks, Mr. Chair. I like the idea.
Thank you.
When we're on page 4, paragraph B, when we're looking at those things that shall be added, and then on page 8, C, those things that shall be deducted, there's a fairly long list. So my concern here is that how does one, maybe in this category of people who are really trying to, at the beginning of their careers, trying to save a little money, how do they navigate through all of this?
Well, it would be a collaborative process between the employer and the employee. So in terms of the subtraction, modification, and deduction just for KISA, they would get a year-end statement about how much they had put in, and they can deduct or subtract, modify up to $1,500. So I don't think that that's difficult for them, and they don't have to have other deductions on their Kansas tax return since it's a subtraction modification. And I think I have that right.
Representative, I think that Revisor could answer that.
Thank you, Chairman. So this bill amends that statute to add the subtraction, modification, or deduction from federal adjusted gross income to arrive at Kansas adjusted gross income. And the rest, you can find that addition to the statute on page 12. So the italicized text on page 12, lines 31 through 36, are what this bill is adding to current law. And the rest of pages, starting on page, section 3, page 4, thank you, to the end of the bill, basically is current law. So we're amending that statute, and the only amendment is on page 12.
Thank you very much.
Yeah, thank you. I misunderstood your question, Representative Dodson.
Any further questions? Seeing none, thank you very much.
Thank you, committee.
Next up, we have Joe Poskin. Welcome to Commerce Committee.
Thank you. Thank you. Chairman Tarwater, members of the committee, thank you for allowing me to speak in support of the Kansas Emergency Savings Account, KISA, House Bill 2680. My name is Joe Poskin. I am a small Kansas incorporated business owner. That was me on that video, just a little clip of me, but I'll give you a little bit more detail here of kind of where this is coming from. First of all, I believe that all companies and business owners want to treat their employees right and do what's best for them. I don't know of any business owner that doesn't. But because there are fewer people in a small business, smaller guys like me, we tend to get to know our employees better, more intimately. We hear about their woes, their joys, their sorrows, their successes, their challenges. What I have found is that on the top of the list that my employees face is a financial one. Just not having money or not having enough money when something arises out of the ordinary, and that's the need for an emergency savings. Every year in the past, we used to get requests from employees, I don't know, anywhere from a couple to half a dozen, 7, 8, a year, where somebody would come up to us and they'd ask us to basically borrow money to pay off a medical bill, to hold off a credit, or to get a car fixed, to get a new washer dryer, whatever it was. We tried to help folks with some loans, and we had financial education sessions on budgeting and reasons to save money. We even had a holiday savings plan where we matched $10 a week for 10 weeks and gave them $200 to go out and shop for Christmas. And all these, I think, helped, but they didn't resolve the issue. It's like, you know, imagine somebody comes up, I need $100, and you're looking like, seriously? You didn't save $100? But, okay. Well, anyway, nothing seemed to nothing seemed to significantly resolve their problems until we came up and we initiated Onward, our emergency savings program. It was founded by Ronnie Washington, the guy you saw in the video, upon his MBA graduation with a grant from Stanford University. The nonprofit Onward is an automated payroll deduction, emergency savings, and lending program. And our company happened to pilot it. And since its inception, we've only experienced very, very positive results. I tell you what, it impacts me because of, it really has. I'm a passionate guy. Really has had nothing but positive effects on our company. Concerns that we used to hear that I just mentioned just stopped completely. And on the contrary, we hear such wonderful stories like, hey, I paid that credit card bill off, or utilizing funds to, we have some people from Mexico and they were able to get home at Christmas time, and we're buying a car or saving for a house. In fact, excuse me, the woman you saw that was looking at the app, I think she's got about $6,000 saved since we started because she wants to buy a house. Yeah, like, I'm into this, huh? Sorry. All right, besides the immediate benefit of the employees to have an emergency savings account or a cookie jar as they can tap should they need it, there's additional benefits, and I just kind of list them there. I don't know if you guys got copies or not, but the employees, like Ronnie said, it gives peace of mind, thus less stressful, happier, healthier, quite frankly, more productive employees. It teaches good financial management habits. It promotes discipline and value of delayed gratification. It provides, obviously, financial protection when it's needed most. It eliminates the need for going to a predatory lender because they got the money. And again, in summary, it just, an emergency savings account fulfills employees' needs, a financial cushion, peace of mind, an emergency fund. And in our case, we have a lending piece that has a low-interest loan tied to it as well that they can tap if they need to. For the business, for me, or for the company, first, it shows proof that we care about our people, and that increases employee loyalty. It builds a positive and gracious company culture. It reduces employee turnover. It definitely increases employee productivity. Imagine, you can't work if you're worried about how you're going to get the bills paid. It just doesn't work. You got to take care of that first. It offers recruiting advantages and benefits that other people don't have, and we talk about it every time somebody walks through our door. We've incorporated this into our recruiting spiel, if you will, and it's very, very real. Reduces the 401k leakage. I don't know if you know what that is, but the 401k guys are all fired up about that, which is another opportunity, but that's another story. Meaning they don't tap their 401k because they got the cash. They don't need to tap it. You don't want them to tap it. That's their future. We call that the ceiling plan, and the onward is the floor plan. Community. These people live in the community. So I think it builds a gracious, more positive community. And dollars stay and get spent on things. Meaning, I don't know about you guys, but if you ever get money, when my dad died years ago, he gave each of the 9 kids a little bit of money. Well, if you had something to do with it, you did something. And if you didn't, it was a year later and you went, hey, you still got that money? No, you don't know where it went. It just wasn't in the bank account anymore. That's what happens to these guys, all of us, quite frankly. So again, this separate savings account stashes it away, and then when the time comes, yeah, they are going into the community and actually buying maybe a larger ticket item or whatever, as I mentioned before. And the last item, which I believe from the depth of my soul, this can help eliminate systemic poverty. It is that powerful to the people at our place. They just don't have these issues anymore, especially if they start to manage it well. Just a tidbit, I'll throw this in. We have 92 people participating, all but 2 at one location and 20 at another. There's that between them, that's $452,000. Just checked this morning, they sent it to me, that has been saved Now think about what I just said. So it's about 100 people, 450. That's over $4,000 a person. Remember the money I got from my dad that I don't know what happened to it? They got $4,000 on the average. They come to me and they say, well, you heard Astrid. She goes, the one woman with the app, she said, I wouldn't have this money. Now I got money. I think she's got over $6,000. I didn't ask her yesterday, but she's got a pot full saved because she's going to buy a house. Anyway, all right, I'll conclude. By God's providence, my business was introduced to the Emergency Savings Accounts program that our business worked hard to pilot and get implemented. So we worked our butts off to get this thing cranking. And that's what we need to eliminate, the hard work for the employer. One tenet in our business mission statement is to help folks become all they're meant to be. And it is this commitment that led us to take the steps we did with no direct or immediate financial benefit to us, only added costs. But it's my opinion that in order for emergency savings plans to be widely adopted by other companies and for their employees to participate, there needs to be financial incentives for the business and financial benefits to the employees to get it started. KISA HB 2680 accomplishes both of these things. I think it needs some tweaking, but that's another story. Once a business sets up the emergency savings accounts and once it starts to roll, the additional aforementioned benefits that I mentioned, they become obvious. So I want a better Kansas. I want better lives for Kansans. I want to financially help my fellow Kansas citizens. I want to stop predatory lenders. Economic growth for Kansans can help in all these areas, and specifically, a Kansas Employee Emergency Savings Account for workers hits directly at the heart of this issue. So I firmly support KISA HB 2680, and I am willing to participate with this committee to help get the bill passed. I don't know what I'm supposed to do, but I'm happy to do anything. sit in sessions or let you pick my brain or whatever. And I'm happy to also participate at the state level to get it implemented throughout the state. And I would be so juiced if Kansas led that charge. Answer any questions if you want, or later, whatever. Thank you.
Thank you for your testimony. I love the passion. You can tell that you're somebody that people want to work for. And I think that's most Kansans are like that. So I'll open it for questions. Representative Johnson.
Thank you, Mr. Chair, and thanks for sharing the story that you have. On yours, you said in one case 90 folks had signed up for the program, all but 2, and other locations. Has the uptake been similar, or was it likely to build to that?
Yeah, actually the 92 have over almost 4,600 saved, and the 20, that was a company that we didn't get started until about halfway through the year. They've already saved 31,000, so they've already averaged 1,564 a person. Now, there's a caveat. We say we match their savings up to a point, just like we do the 401k. So we say we have 2 stipulations. You got to do the 401k first. You want to get in? You want me to match your savings? Are you doing your 401k for later? Oh, you're not? You want the match, we will still automatically save, but we don't necessarily match. But if they do that, we say, okay, we'll match. The second thing, Representative, is that we say you got to keep $1,000 in there. It's like, what? It's like, it's your money, but we just want you to, if you want the match, because the whole point of the emergency savings plan is that when you need it, there's money there. So that's just a stipulation we have in our business. If you want the match, do the 401k first, and second, keep $1,000, and we give them 9 months to get to $1,000, when they first sign up. So that's how we do it, and then they leave it there. Anyway.
So, actually, that's really helpful, so thank you, and how that's set up to provide those incentives, and that's something that can happen right now using the app that anyone could do. What we're looking to add then is the credit and the deduction, is that right?
which, by the way, in that regard, imagine, we didn't get anything, you know, and so, but it was like, we got to do that's the right thing to do, we got to do it. And we got a gift, too, that helped us. But I think not everybody's the same. I do think that every business person wants to do what's right for their people. But if you're going to make it hard for me, if it's going to cost me money, as the chamber president said, I'm not so fired up about that. And especially if I got to work. I don't know, you notice we made Frieza's plumbing valves, you know, it's like, we're not financiers, we're not counselors to people. If that's all set up, yeah, we'll participate, but make it easy for me. And if you give me a break with taxes or whatever, I think you should give me a full break for all those taxes, just saying. For what we contribute, instead of 25 or 50, make it 100%. It's not that much. It's only 5% of payroll. But that's another story. Sorry.
And if I may on that, with that piece then, the reporting for the employer-employee, is that something that's already set up or something we would need to figure out how that reporting works through to give the credit and to...
Comes right off of Paycor, right off, we know exactly what we sent over to the separate savings account. It's key that it's separate. So we know exactly what we've sent to each employee. It's easily summed up right from any pay system. It's on the check too, you know, so that's pretty easy for them to know, like, oh, I put in $1,562 into my onward account, and that's what we call it, the onward account. And we'd know that we matched however much of that.
And then they would take that information, either if they did their taxes or had an accountant do it, and they would have their adjusted to adjusted gross income from their records?
I don't know how Paycor would do it, but they'd certainly have that number there that they could, if they're doing their taxes, you know, if it said that you could put a KeySet thing in there, they could just write it right in. Okay. They'd have that number on their W-2 or whatever.
Thank you. Thank you, Mr. Chair.
Yeah, I would imagine that it would be similar to making an insurance premium payment that would just come out before taxes in the software if the tax deduction survives the bill. Charles, I'm sorry. He mentioned that he has a requirement of $1,000 minimum in the account in order to match, and he also mentioned that he requires them to participate in the 401k first before he'll match. This bill, I think, precludes that.
Just what I wanted to add is that the bill is set up to have the absolute minimum of the best practices, but businesses could add the loan component, they could add various things, they could add their own requirements to, you know, have $1,000 before they match or something. So each business could customize the KISA according to the minimum requirements in the bill.
Yeah, I might add too that when Ronnie showed up, what we did the first year is he just said, you know, I was like, let's go. And he's like, you know, let's figure out if they'll just do it. So all he did, there's education that has to take place at the front end so that people start to get it. But basically it's like, hey, we got a payroll deduction thing that'll put money in a cookie jar, a separate savings account. You want to participate? Anybody want to participate? Is it my money? Can I? Yeah, it's 100% your money. You don't have to check. You know, we're not going to touch it. But do you want to do that? Because we have a tendency not to save, myself included. And so we had, at the time, we had about 50 people. So we've more than doubled since we've done this. But anyway, about 17 people just said, yeah, I'll do that. So they just did it. And then as that year was coming to a conclusion, we were like, we got to start this for everybody. Let's get everybody involved. And we thought, how do I get every person in the room to do this? Because we all need to save, from the CEO down to the last guy hired. And we contemplated, how do I do this? How do we get everybody to participate? This is such a smart thing. I don't want 50%, I want everybody, you know. How do we do it? How do we do it? And small voice said, well, match their savings and they'll do it. And of course, then you tell the small voice to shut up, get out of here. What? That's more money. But, and then by the grace of God, we got a gift from insurance from 3 years earlier that just happened to be the exact amount that we were going to have to match for that upcoming year to all payroll. I went, we're matching. And so that's when we did it, and every single person signed up, but there's two weird conditions. They involve divorces and whatever, but you know.
Okay, let's not get into that. All right, so we get the point, but my question to the reviser was, this bill puts the account in your employee's name and keeps you from making any kind of restrictions. And so my question to him was, if this bill passes, would you still be able to do that and participate? The law won't allow you, is my question.
Yeah.
And so, Charles.
Thank you, Chairman. So if you look at the bottom of page 1 of the bill, there are requirements with respect to the deposits. And if you look at line 35, line 34 and 35, way in the bottom of page 1, you'll see that there's a requirement that the employer make an initial deposit at an amount of at least $50. And then the language on line 36 is the employer may make additional deposits to employees' savings accounts based on matching funds or other amounts.
It's not requiring any matching.
As determined by the employer. So the bill does not require an employer to make any kind of deposits other than that initial deposit of at least $50. With respect to the limitation, that language you can see on page 2, lines 18, or I guess it's, yes, 18 through 20. And as written, the bill says, the eligible employer shall not attempt to restrict the use of any monies in employees' savings accounts established pursuant to this section. So if I heard you, Chairman, correctly as to what the program that the conferee was offering, I don't think that would be in conflict with the bill. As long as that, wouldn't be characterized as somehow restricting the use of the employee's money. As long as they can do what they want with their money, then it shouldn't be in violation.
Okay, great, thank you. We have a question with, nope. Representative Kessler.
Thank you, Mr. Chair. So how do you determine that they have a $1,000 minimum in that account with the privacy laws, and this is actually their account? How do you understand that there's a $1,000 minimum in their accounts?
The privacy issues or whatnot, you're saying? So at least in our case, and again, I agree that I don't think there should be a requisite to match. I think people will, and I think that's how you get everybody involved, but at least that'll get it going just like it got for us, and they can do whatever. And to answer that question, a couple things. One, when they sign up for their Onward account, there's language that says, hey, we need to know what your account balance is to know our matching policy. And they agree, like, yeah, you can look at that. We don't actually look at it. The credit union with the Onward representative does, and then sends that to our payroll processor. Now, that sends it to our person inside, and hopefully that's not doing anything bad, but that's how, so like if Mr. Tarwater there has only got $500 in his account, well, then we're only matching 2.5% instead of the 5%. That's kind of how that works. But most people, there's not an issue. I think there was 7 total that were below the $1,000. And a lot of times that's just because they don't get it. They don't realize they need to leave that in there. Sorry about that.
Thank you for that. You also said you have a loan program kind of set up in conjunction with this. Just real briefly, how's that structured?
It's awesome. You can borrow up to double what you've saved, up to $2,000 max. This is not in the bill or anything. This is just what we do. And here's how we guarantee a low interest rate. One of the things that Ronnie, who you saw in the film, found out in his research, that even people that did save money, what would happen is they'd have an event and then they'd get their money wiped out. And it's like, oh, I've been saving for 3 years, I had $2,200, and then this big thing happened and now I got nothing. He wanted to avoid their savings getting washed away, and that's why the loan program got initiated. So the way it works is, say you got $1,000 and you want to borrow $2,000, we're tied to a credit union. The credit union holds your $1,000 as collateral, lends you $2,000. As it turns out, the company, we put up the other $1,000 collateral. So the credit union has, they're going to get their money because it's sitting there, and then they pay off either a 3, 6, or 9-month term, and even the lowest paid at $25,000 a year, you can borrow $2,000 in our system. Imagine 3% at 9 months is $45. So you got $2,045 to pay, and it gets paid off in a matter of 9 months, 6 or 9 months.
Representative Carpenter.
Thank you, Mr. Chair. Not to beleaguer the point, but line 18, the eligible employer shall not attempt to restrict the use of any monies in the employee's savings account established pursuant to this section. I think it's very, if you have a $1,000 minimum, you require that restricts the use of that employee's money. But I'm not an attorney here or anything, but it seems to me like.
I think the restriction is against the matching. They could still take it out and spend it however. The restriction in the bill is they can't control how they spend it or what they spend it on. But if they were going to put a restriction as far as you had to have a minimum balance in order to participate in the matching, the bill is silent on that, from what I understand.
And we don't have any restrictions either.
All right, sir, I'm not seeing any further questions. Thank you very much.
Thank you.
Okay, we've got a few more. Stephanie Mulholland would be next from the Heartland Credit Union Association.
Thank you, Mr. Chair and members of the committee. I am Stephanie Mulholland here on behalf of Heartland Credit Union Association. I didn't know before I came today that they use a credit union for this program, so thrilled that they do, and I'm happy to lend our support for the concept. Heartland represents 74 credit unions across the state and the 676,000 Kansans who use a credit union. We are not-for-profit, member-owned co-ops. Part of that mission is to help families build their financial security and strengthen the middle class. A couple of ways that we do that are through helping people establish emergency funds. We did help over 64,000 Kansans with free financial counseling last year. And so we see this bill as having the potential to bring those two critical factors together in helping people stabilize their finances, that being encouraging them to save while getting financial literacy training at the same time. So I know there may be some logistics to work out with this, but I do want to lend our support as one more tool to help people stabilize their finances, one more tool to help employers with recruitment and retention. I'm happy to stand for questions.
Representative Johnson.
Thank you, Mr. Chair, and thanks for your testimony. As you look to this, would this be a standard account that you already have? Would there be a unique account that is established? I know there are sometimes different fees, different flexibility. How do you see that working, and how does that work if I am in Johnson County or McPherson County? How will that all play together?
Sure. So I would assume these would be standard savings accounts. Depending on how this program takes off in the state, I would assume financial institutions would probably look at ways that they could pool those in some way in order to reduce costs for the employer in managing those accounts. But back in 2016, I know you were here at that time, we passed, the legislature passed prize-linked savings accounts. Those were to encourage people to establish an emergency fund. Those are just standard savings accounts that look and feel like any other savings account for the consumer. But on the back end, we're offering incentives for them to establish that habit of savings. But I think on the back end, these would just be regular savings accounts.
So thanks, and then the focus would be on flexibility, and maybe there's a small interest rate in the current environment, but for the most part, it's flexible and available, and no real restrictions there, other than it probably isn't a checking account with that type of flexibility, but.
Right, I think it'd have the same flexibility as any savings account, and then I think there's a requirement in the bill that there's the mobile app function tied to that, so we would need to make sure that's involved as well.
Seeing no further questions, thank you very much. Next up is Alex Oro. KBA.
Good afternoon, committee. For the record, I am Alex Orr, appearing on behalf of the Kansas Bankers Association. Appreciate the opportunity before this committee. Don't get to be here very often, so appreciate that. I am appearing on behalf of the KBA, since I am not here very often. And just a little quick overview of the KBA. We're organized in 1887, and our membership includes 99% of the 220 banks and savings and loans headquartered in Kansas. Our membership also includes the 20 out-of-state commercial banks operating in Kansas, and the Kansas banking industry employs more than 22,000 Kansans that provide financial services in every county across our state. It's a pleasure to be before you today to provide proponent testimony in support of HB 2680. I appreciate the sponsors of the bill and the previous conferees on their work on this. I do believe this is a very good piece of legislation. I know there's probably going to be some kinks that need to be worked out, but we do support the creation of the Kansas Employee Emergency Savings Account. We have historically, the KBA, have supported initiatives that created similar programs. Look back to last year, the first-time homebuyers savings account legislation that overwhelmingly passed this legislature. This is something that is very similar to that, Mr. Chairman, Representative Johnson. In terms of standard account, we see this as probably operating something very similar to the first-time homebuyer savings account within those institutions. We've also supported legislation achieving a better life experience savings accounts, the ABLE programs. These are all good tools for Kansans for long-term, but any legislation that promotes and incentivizes savings, we believe is best interest of long-term Kansans. We view this bill as another way to encourage individuals to save and teach them about financial literacy. And a little piece about financial literacy, a lot of people are talking about that. I will tell you, this committee, the Kansas Bankers Association, every 3 years goes through a strategic plan, a very robust one. We just finished one, and financial literacy is a very strong piece of that to promote and identify ways to support those initiatives. Kelly and I actually had the opportunity, and I'll introduce Kelly Van Zoll, Assistant Vice President of Government Relations, actually had a recent meeting with Commissioner of Education, Randy Watson, to talk about financial literacy in our schools. And I know there was legislation about that. I won't get into that details, but we told the State Board and Commissioner that whatever our industry can do to help with those efforts within our education system, we are here to be a resource because it is critically important. We do appreciate the flexibility of this program because it allows the employer to do what they want to do with their employees. There is no mandate here. They can use whatever app they want. If our individual institutions want to integrate some sort of financial literacy or some sort of type into their mobile banking app, they have that opportunity too. I know there's apps out there on the shelf that have that ability, and they are absolutely able to do that. But it does have flexibility. This bill does have the ability to be a collaborative effort between the employee and the employer to teach them about saving, to teach them about financial literacy, and to help them long-term to meet their needs. So I do believe this is a good piece of legislation and encourage your support and appreciate the opportunity to be here and before you today. And I'd stand for questions at the appropriate time. Thank you, Mr. Chairman.
Representative Johnson.
Thank you, committee, for your patience with my questions. I share your passion on financial literacy, which I think is one important piece across this to try and get there. So that is good. On the reporting pieces, on my other accounts where I get a tax deduction, et cetera, I get that from the financial institution. Where do you see the reporting role as this goes through and how that ties together?
On the reporting, on like the specific expenditures out of the account?
No, if I have a deduction on for tax, et cetera, I get that from where I have my IRA or those types of things. Would you see that be a similar consistent reporting for us, or how might that work?
My understanding would be yes, but I will double check on that, Representative.
Seeing no further questions, thank you very much, Alex. It's always good to hear from you.
Thank you, Mr. Chairman.
And you're welcome in Commerce anytime.
Thank you.
We've got a couple of online proponents, and we'll start with Leigh Phillips. I think she's going to go.
Chairman, members of the committee, thank you for the opportunity to comment on the Kansas Employee Emergency Savings Account legislation. My name is Leigh Phillips, and I am the CEO of Saver Life, a national nonprofit. Our mission is to change the balance for working families by helping them to save and invest in their future. Through engaging technologies and strategic partnerships, we give working people the methods and motivation to build a habit of savings, establish an emergency fund, and take control of their finances. We currently represent over 500,000 members nationwide, with roughly 2,100 members in the state of Kansas. So we are quite similar to some of the other technologies that have been discussed so far today. 67% of employees in the US report being financially stressed, and their top concern is a lack of emergency savings. This bill has multiple benefits. It will benefit the hardworking people of Kansas by providing accessible savings tools directly through their workplace. It will benefit employers because a financially healthy workforce is a more productive workforce. And it will benefit the nation by serving as an example of how state governments can support businesses as they develop employer benefits designed for the 21st century workplace. As we emerge from a challenging 2 years for employers and employees alike, it is vitally important that we use this opportunity to develop common sense, win-win solutions for both businesses and workers. As the economy rebounds, employers are facing challenges in recruiting and retaining a skilled workforce. Simultaneously, workers are looking to rebuild financial security for their families. Small businesses in particular worry about hiring as they recover from the crushing effects of COVID-19 closures. In a recent survey, 50% of small businesses across the country said that finding and retaining qualified employees is their primary concern. Adding emergency savings to employee benefit programs, like the proposed legislation does, can help attract and retain workers in a way that is cost-effective and mutually beneficial. Saver Life knows firsthand just how effective employer-based savings programs are at improving financial well-being for employees and creating a more stable workforce for employers. Saver Life partners with employers to provide our turnkey savings platform, which leverages prize-linked savings, gamification, and behavioral science to encourage employees to develop a habit of savings while lowering stress and improving morale. We have worked with some of the country's largest employers, including Levi Strauss, KFC, and HCA Healthcare. These employers are leading the way by offering emergency savings programs to their employees and demonstrating a commitment to the financial health of their workers and their communities. We offer Saver Life membership to all employees of a company through which they receive our foundational games and challenges that engage and promote savings, high-quality financial education content, an online community to provide support, and a financial health score that allows people to track their progress over time. Saver Life offers a simple solution for employers looking to launch a savings program for their workers. Our mobile-first platform links to an employee's existing account at their bank or credit union, allowing employees to save at the financial institution of their choice and minimizing complexity and liability for employers. Our results speak to the importance of these types of employee benefits and their popularity with workers. Across our various employer-based programs, 50% of participants deposit $500 or more in the first 6 months of joining. 63% of employees are less likely to borrow money. 68% of employees are less stressed about money, which makes them stronger, more stable employees. And 65% of employees now say they're more likely to stay with the company, helping employers retain the workers they are investing in. We thank you for the opportunity to provide comments on this important piece of legislation. We urge your support of the measure, which we believe will greatly benefit employers and workers in Kansas and potentially serve as a blueprint for the rest of the country. And we're happy to help and advise along the way and answer any questions you may have for me.
And seeing no questions. Representative Johnson, you want to take a stab at it? Thank you, ma'am. I appreciate it. Next proponent is Tim Shaw with Aspen Institute.
Thank you, Chairman Tarwater and members of the committee, and thank you for considering this important piece of legislation supporting workplace emergency savings in House Bill 2680. I'm Tim Shaw, Associate Director of Policy at the Aspen Institute Financial Security Program, and basically my role here today is to confirm that the national research we have found on financial security supports all of the stories you've heard from the prior speakers today about the power of workplace emergency savings. My team has spent years researching the financial lives of households and have found that adequate emergency savings is not just a critical tool for workers to deal with unexpected expenses, but is also the foundation for them to take the first step toward building wealth. The program under consideration today aligns with the evidence we have gathered on the most effective tools for building workplace emergency savings. It will provide a powerful recruitment tool for Kansas employers who take up the program, and it will provide many Kansans with a powerful tool to build financial security and ultimately wealth. In 2017, researchers found that having short-term liquid savings to smooth volatile income and expenses or to cover unexpected financial emergencies was the single most important factor for household financial well-being. But a recent survey by the Bipartisan Policy Center found that 45% of Americans could not cover an unexpected $400 expense without borrowing or selling something. Unfortunately, existing emergency savings solutions don't always meet the needs of millions of people, regardless of income. In part, as has been discussed quite a bit today, this is because human behavior can be an obstacle to saving. As you all know, 401ks have been one of the most successful saving tools currently available to Americans. And their success is largely thanks to locating retirement savings at the workplace, where it can be easily automated through payroll deduction when offered by an employer. This option is seldom available for emergency savings, and that's the reason that this bill is such a powerful tool for emergency savings. Fortunately, employers, like one of the prior speakers, have begun to take note of the deep need workers have for these tools. In 2019, 58% of employers reported that they were concerned about that their employees were unprepared to meet unexpected financial challenges. Workers' financial challenges are both a household problem and a business problem. One study estimates that employees' financial stress could cost businesses up to $250 billion a year in reduced productivity. While access to workplace emergency savings remain low, some employers, like one of the prior speakers, have begun to design and build products that provide these tools in the workplace. Pitt, Ohio is another example. It's a trucking company, and it introduced an emergency savings tool for employees in 2016 after they found evidence that unsafe driving practices were linked to drivers' worries about personal finances. By 2019, it reported that almost half of its employees had opened an account. The proposed KSA program provides critical support to small businesses who choose to offer emergency savings accounts to the workplace, funded through payroll deductions by the employee. In addition, it provides a first-of-its-kind tax credit for small businesses who provide matching contributions to workplace savings. Research on employer matches in retirement savings finds that the existence of these matching tools are very powerful. They boost retirement plan participation by 3 to 10 percentage points. My expectation is that the effect on emergency savings will be even more powerful because this will be a new program to many employees, as the prior speaker said, who will need additional incentive to participate. Even seemingly small matches, like the $50 that this provides for upfront, will be a powerful tool for low-income savers. Researchers at SaverLife found that families with as little as $250 are less likely to be evicted, delay paying bills, or turn to high-cost credit alternatives such as payday loans after a large income disruption. The thoughtful account design embedded in the program also aligns with key principles researchers have found about people's cyclical savings needs, including making sure it can be automatically replenished through payroll deductions, unlimited accessibility of the funds as has been discussed today, liquidity of the funds, being low or no fee, and being a separate account so that people know that that money that they have set aside is for emergencies. The program that's designed will already be a powerful tool to enhance workplace emergency savings. It could also be the foundation for additional policies, such as allowing for automatic enrollment features in emergency savings plans, which is now a common business practice that has increased participation in retirement savings. In summary, the workplace benefit provided by the KISA program would be a powerful recruitment tool for employers and could set Kansas businesses apart by providing a cutting-edge benefit for financial security that few employers in the country have taken advantage of. Thank you again for considering this important legislation, and I'm more than happy to be a resource for the committee as you work through the proposal, and also happy to take any questions you might have right now.
Seeing no questions, thank you very much, sir. Last up is a neutral testimony from the Overland Park Chamber.
Mr. Chairman, Kevin Walker, Overland Park Chamber of Commerce. Appreciate the opportunity to be here. I don't want our neutral testimony to be construed as trying to dampen any enthusiasm. I think the proposal before you is a phenomenal idea. Very excited that it's an opportunity for to offer a benefit that employees can offer to their employee, or the employer can offer to their employees. We've heard today that recruitment is really, really difficult. Retention is really, really difficult. And if this can be something that we can use to help solve those problems, we're all for it. My main concern coming up earlier had to do with cost. And I've been able to visit with some of the conferees prior to speaking and understand that some of those cost issues that I was concerned about are probably not there, and that's a great thing. So the biggest thing I think I would leave with you, a number of questions have come up today regarding the implementation and some of the oversight. Many of our small businesses don't have a lot of resources to dedicate towards these types of programs. We have all sorts of reporting that we're currently required to do. Adding some additional administrative burden can be a challenge. So we ask that as you work through this legislation and you address some of the questions that you all have brought up, that you keep in mind that to keep this program simple, both for the employees that are going to use it and for the employers that are going to administer it, we would ask that you keep that in mind so that we can make this simple, make it easy, and make it a tool that's readily available.
Representative Hoppin.
Thank you, Mr. Chairman. So with that in mind, and Charles, you may be able to answer this, who would be responsible for the reporting? You know, when we give money to our health savings account, you know, the bank that we have, they're the ones that report that, you know, to us for our tax purposes. So under the bill, who would be responsible? Would it be the employer? Would it be the bank that the employer is using? Or would it be this mobile app? Does it specify in the bill how the reporting would be done?
Representative, it doesn't particularly specify, except that there is a requirement that the employer provide the employee with a report of the deposits made by the employee through payroll deductions each year. So there's that.
That the employer would have to provide to the employee how much they put in.
Correct.
Okay. But it doesn't specify who actually sends the, what would be a 1099 probably, or something like that?
And those are some of the things that I'm asking you to just keep in mind as we work through this. It's a fabulous idea. Being the first in the country to do something often is going to, you know, put on our shoulders working through some of those components. I do believe there is some language in the bill that has the employer reporting certain participation numbers to, I believe, the Department of Revenue. I think those are generally minor. Which is fine, but again, it just goes with my theme that if we're going to do this, please, as much as possible, keep it simple so that it's not an additional administrative or cost burden onto the employer.
I hear you, and this bill, it's going to require quite a bit of work to make it right, and committee probably what we'll end up doing is sending this over to an exempt committee so that we could look at it after turnaround and make a good bill out of it. But any other questions?
And Mr. Chairman, we're happy to offer additional thoughts from the employer perspective. We do not want to dampen the enthusiasm for this, but we just want that point of view kept in mind.
Okay. Representative Mason.
Thank you, Mr. Chairman. This is not for a specific conferee, just a general probing question. Is anyone here from the Department of Revenue? No? Okay, I was just looking at the fiscal note on the Kansas Legislative website, and it just seems extraordinarily high, and I was wondering if any one of the conferees would want to address that, whether they think it's accurate or whether they reject it, what have you.
Yes, we did discuss that fiscal note, and I believe the first conferee stated that the Department of Revenue assumed that all employees and all employers would participate, and there is no federal tax benefit to this, and so the benefit, really the deduction, doesn't add up to a whole lot. I don't see it. I don't see that many companies using this. I see some of our better companies that want to, retain their employees and help them out. I see them using it, and I don't really see, and this will be up to the committee, but I don't really see a tax deduction for the employee making it through this deal because it's just too complicated. We are not the tax committee.
So the opinion would be it is artificially high.
I think it's artificially high by far.
Thanks, sir.
Mm-hmm. Seeing no further questions, we'll go ahead. There are no other proponents, opponents, or neutral. We're going to go ahead and close the hearing on HB 2680. And next up is Mike Gibson from the Associated General Contractors to talk about Build Up Kansas and workforce. Committee, we have, if you remember, Mike, extremely passionate about what he does. We did have a presentation on Build Up Kansas last year. The purpose of this meeting is to give us a quick update on where they are and what they need to expand the program. If Build Up Kansas is not in your current high schools in your district, they need to be, especially with Apex being on the horizon. With the number of jobs that we're going to need, these are technical and manufacturing type jobs, and Build Up Kansas is a perfect way to get high schoolers involved in this program and get them out and have them make some pretty good money right out of college if they wanted to. So without further ado, I know, sir, that, and I apologize that we drugged this thing out for you, this last one, but he did have a 2:30 appointment that he's late for, and so he'll probably go pretty quickly.
Thank you, Mr. Chairman. I'm giving your IT guy a quick piece of information. Appreciate the opportunity to be here. This committee is the roadmap to the future of Kansas. That's why I get excited to come before you, because you do set the stage, and a lot of Kansans look to your committee and your leadership for their future. My name is Mike Gibson. I'm the Executive Vice President of Associated General Contractors. Our name is a little misleading in the fact that we represent both commercial, industrial, utility, commercial general contractors, specialty subcontractors, and suppliers across the state of Kansas. I was going to have some of my members stand. They had another appointment to go to, although y'all could write a book on jumping from one appointment to another. But they came up to Topeka today from all parts of Kansas to visit with a variety of folks. But I stand here today to give you an update on what we're doing with Build Up Kansas. We are in nearly 125 high schools, community colleges, and VOTEC centers, along with correctional facilities. I want to stress we don't look at just the traditional ways of workforce. We look at non-traditional, and we've been extremely successful in the correctional facilities. AGC of Kansas is the largest sponsor of the #1 credentialed training material cited by the state of Kansas, the National Center for Construction Education and Research, NCCR, which, by the way, is the credential curriculum for Senate Bill 155, and you've heard me pat you on the back multiple times since the passage of Senate Bill 155. In my opinion, in the 10 years I've been in your great state, it is the best piece of legislation ever to be passed. But there's better legislation coming down the pipe. I know all of you are looking at those pieces of legislation. But the NCCR materials provide young women and men the opportunity to achieve construction credentials to make them valuable assets for hire. To complement AGC's vocational partners, AGC launched a social media program called Build Up Kansas. We target social media. That's how young women and men want their information today, is through social media. We target 17 to 22-year-olds and their parents. The parents, because they're the ones who are looking at what their young daughter or son are going to do in their future, and they have certain expectations, of which the last 30 or 40 years, a lot of people say that you have to go to college to be successful. I'm here to tell you that's not an accurate statement. But this program continues to experience high levels of connecting Kansas' younger generation to good-paying careers in construction. We have surpassed 750,000 landing page hits with an average of 4 minutes of viewership. Included in there, and I guess the one thing I was talking to your IT guy about, that if there was an opportunity, if you have not visited buildupkansas.com, which is buildupks.com, I would encourage you to do so. And the reason for that is because it's just not a landing page. It's not a static page. It's unique in its nature. There's no other industry that has something like that. It has a human resource platform. That HR platform affords the construction industry the ability to post their job openings by craft and by city. That's the thing that has really energized our vocational students across the state of Kansas. Not only are they being told by their vocational director and by our speakers bureau who go to talk to these kids in their classroom, they can go home and look at, this is the landing page here, real quick, and I just wanted to show you, you just put it right there, that's fine. If you scroll down the page, and I'll talk a little bit, just a minute, we added community colleges and 4 universities where almost every community college and our 3 construction programs at Kansas State, Pittsburgh State have 2-minute videos promoting their programs, and I'll talk about that just a second here in a minute. But if you scroll down the page and click on any one of these searches, and we'll look at an entry-level position, and I'll just randomly pick somebody that's posted a job. Somebody's looking for a carpenter, general labor. I don't know who that is. Walters Morgan is looking for carpenters and general laborers out of Manhattan. Walters Morgan's does a lot of different infrastructure projects, but here's the uniqueness of it. That high school student or community college student can download their resume and drop and drag their resume and send it directly to the HR director who posted that job opening. We are making a difference in connecting real jobs to our younger generation. By the way, we are committed to turning around the outmigration of population in this state. We're 48th in the country, and I heard passion from these folks behind me. I rewrote the book on passion, ladies and gentlemen. I can tell you something. There is no reason whatsoever that Kansas should be at the bottom of the totem pole. And we're committed to moving that up to be one of the top, because we can provide good paying, not jobs, careers to fill. And I'll show you a map here in terms of right now we have 69 or 62,000 construction jobs in the state of Kansas. We need another 56 to 57,000 over the next several years. But they are not minimum wage jobs. And by the way, the focus groups we're doing with these high school VOTEC students and community college students are telling us they want to stay close to home. And that's why they're in a VOTEC program, because they want to get a job close to home. And by the way, if they start making good money, which they will, as they meet their future wife or husband, they're going to start a family in their local communities. And we're going to see population growth. You heard me say, and I said this before Christy Williams Committee back in December, and I really appreciated the invite. We were the only business group to be invited for her special education committee. And I said this, and I'll say this to you. What happens in the next 5 years if we lose 10% of our population? That's 300,000 people. That's a lot of tax base, ladies and gentlemen. You are the future developing a roadmap. If I told you you were going to be less 300,000 people, how are you going to figure a budget for the citizens of Kansas? AGC of Kansas, the not-so-sexy kid on the block in construction, started this journey 20 years ago in getting our training curriculum, NCCR curriculum, into the schools. We've invested over $4 million. We're not here to talk to you about startup money. Most of the time you're approached with, can I have money? What are you going to do with it? Well, we're going to start this program. Ladies and gentlemen, we started this over 20 years ago. We're in our 4th year of Build Up Kansas. Christy Williams Committee, and I heard Christy say this loud and clear in December. Her goal, and she looked out in the audience because we had quite a few school districts in the audience. Her goal was to get a vocational program in every school across the state of Kansas. AGC of Kansas heard that and started that long before she said that, but we're doing it now. We added 21 new schools just in the month of, or in the year of 2021 to our complement of high schools and community colleges and VOTEC. Build Up Kansas also added landing page. I mentioned before, and I know my technology friend probably could help me here, but let's see if I can get back over there to it real quick. Let me get to the main page. The fact is, we added, there you go, thank you. We added promotional videos for the community colleges in the fall of this year, or of 2021. The year before, we added landing pages for our 3 construction science programs at Kansas State, Pittsburgh State, and Fort Hays. Within 60 days of us going live and pushing out social media, and I'd encourage you to click on one of those videos to see what's going on in those local schools. But I have letters incorporated into my testimony from Kansas State and Pittsburgh State. They saw over a 50% increase in high school seniors inquiring about enrolling in their construction program because they didn't know what was going on in the construction program at Pittsburgh State, Kansas State, and Fort Hays State, which is amazing to me because these kids get all their information off their phone. But because we're geofencing their schools with social media, their eyes are opening it up. But then it gave us the idea, and we were the only business group to be invited to the president's meeting of the community colleges in Hutchinson, Kansas last August to talk about Build Up Kansas. I showed them the video, and the president of Hutch said, could you do that for the community colleges? I think if you click on, well, I'll click on it for you real quick.
You're down to about 2 minutes, sir, so you can ask your question.
Community colleges, we have about 13 or 14 community colleges that have put their video on Build Up Kansas. And the reason for that is in our focus groups with the high school students across the state, of which we recently did one at Chanute, Garden City, Manhattan, and Hayes, those schools said, we don't know what community colleges are offering. We're showing them what's going on in the community colleges. They're using our curriculum. But at the end of the day, ladies and gentlemen, what we're doing is we're bringing a curriculum to the schools. They don't have to recreate the wheel. They have credentials that the students can achieve to then show the contractors what they have in order to be hired. But at the same time, one of my contractors to stand up, we did a survey over the last 2 years. The #1 challenge is workforce, entry-level workers, and upgrade training. I will suggest to you right now, I don't know who the company is with Apex, but AGC could work with our educational partners right now to demonstrate the existing workforce and the incoming workforce. We could meet those 16,000 workers that are needed out there. And I would suggest to you that future Apex clients that are looking at Kansas, we can do the same thing. We can do it now, not later, not somewhere 3 or 4 years down the line. We will get vocational programming in every high school. We will funnel those students into the workforce. And we will be able to give you ammunition and those economic development folks the ammunition to show those Fortune 500 companies that Kansas is not only a great quality of life state, but also has skilled workers to go along with it. We appreciate your partnership, but we have only scratched the surface. We need some additional resources to continue the journey that we're going on right now. In addition, you all received an invitation. You get a lot of invites to go to a lot of receptions, probably 6 to 8 a night. We're inviting you to come over and see where the rubber hits the road this afternoon from 5 to 6:30 over at Washburn Technology, one of our first NCCR partners. You will tour their carpenter program, their HVAC program, their electrical program, and their diesel heavy equipment program. You'll be able to talk to the students that are in those classrooms. Again, we don't come up here and just talk. We do. And why? Because construction folks are doers. And if they don't have construction workers to deliver, then we can't get the job done. So we have a built-in incentive to do what we do. So you haven't heard the end of me and Associated General Contractors. I can't tell you how much I appreciate this committee and your counterparts over on the Senate side, because again, you are the future. You develop the roadmap for us in Kansas. I stand ready for any questions.
Mike, do you charge for your program? If a high school wanted to use your program, you have a train-the-trainer program, but what's the cost for a school to get into your program, or is there?
Right now, we have a trainer cost. That's the only cost associated with it. It's a $500 train-the-trainer associated with it. Right now, we have 276 trained certified instructors to teach NCCR. We're bearing the cost right now. That cost is becoming overwhelming because of the overwhelming response we've gotten from the community colleges and high schools and VOTEC and correctional facilities, because they recognize they don't have to go out and find this curriculum. It's already there. It's in a turnkey process. By the way, it's delivered by one of the top educating publishers in the country, Apprentice Hall. So the educators already are quick to grab hold of this program.
All right, committee, so very inexpensive for your schools. Great program. Manpower is a need in Kansas, and we just made it worse with this Apex deal. So I would tell you that this is, if they're not in your school, get your schools involved. And we're hearing the budget tomorrow for commerce. I think you do this, currently your budget's like $125,000, right?
That's correct, and I mean, it's a shoestring budget, and we've been able to do a lot just with that. But imagine what we could do with just a little bit more assistance. And again, this organization is not asking for startup money. We're doing. But again, that's why it was important that we reached out to you 3 years ago to say, would you want to be a partner with us? Oh, by the way, we're also talking with Evergy. We're also talking with aviation. They don't have the connections that we do because they're just in their infant stages of what they're doing. They have a couple local high schools in Wichita, but now they want to talk to us. How do we tap into these other 100+ schools? Because, ladies and gentlemen, I will tell you, I grew up in Houston, Texas. It's a greater metropolitan community, but its strength is with the sum of its parts. Imagine Topeka, all the small communities that surround Topeka in the Johnson County, Wyandotte area, Wichita, you've got Augusta and Pratt and Kingman. All of that is great human resource, and a lot of them have some vocational programming, but they are willing to commute into their local communities and work during the day and go home to see mom and dad at night. What a great model, and what a great way to grow our population by giving these young people the skills necessary. By the way, we're advocating our next step is regional trades programs. Regional in nature, to where all the high schools that we have can feed into the community colleges, and some will want to go on to four-year institutions. But some will just want to get some upgrade training in community colleges. By the way, that gives them more buying power or more ability to move up the salary ladder in the construction community. But we're also talking about cross-training with other industries. What frustrates me more is aviation laid off about 16,000 people in Sedgwick County the last couple of years. Some of it was out of their control with the 737 MAX. I will promise you, I'll take you to lunch if I'm wrong. Half of those employees left Kansas and never came back. They went to the Carolinas, they went to Birmingham, they went to Washington State. What if we would have done cross-training in a regional process to where they had cross-section of skills and they could have crossed over in construction? By the way, we had a career day. We hired 900 of them a year and a half ago on the spot. But imagine if you had cross-training, a novel concept. It really isn't. That's why I say we've got some great education community or educators in this community.
Mike, I'm sorry, we have to cut it off. I have a New Year's resolution to go over 3, and not to go over 3, and I have broken it again.
If you have somebody that you need help with your local high school, you know where to find me. We can get you up and running in less than 90 days.
Thank you, sir.
Thank y'all.
We're adjourned. I'm sorry, Charles has something.
Yeah, thank you, Chairman. So Representative Hoffman had asked a question about reporting requirements for tax purposes, and I had forgotten that there is a provision in the bill on the bottom of page 3 that provides that the taxpayer, and that being the employer, is to provide information to the Secretary of Revenue with respect to administration of the provisions of the tax credit for the employer.
Okay, thank you very much. I'll let him know that. Bottom of page 3. Thank you.